I wanted to do a quick follow-up video. Oh my God, I need to trim this. I look like, I'm getting on a plane soon, so I gotta trim this. Anyway, the hat doesn't help either. It almost looks like a, never, you know what?
I just want all of the money. Do you know what I said? I gotta get the dinero, the cash, and the bread. Money.
I wanna talk a little bit more about stocks this week. The market really hasn't gotten that cheap yet. Pull up Disney stock. It's $94, which is very cheap. It's come down a long way. Square stock is very cheap. It's $57. It was at like 200 and change, and it's come down a lot. But if you compare it to the price of where it was at in 2020, before all the extreme easy money, before COVID, before the massive fake bull market that we had, it's not cheap. It's about the same price as it was then. Facebook is basically where it was at. The tape is looking even worse. We could head lower. Even if you look at Google and Amazon, I think these are even up from that point of time, which is why the overall S&P is up. Keep all that in mind. I do have a huge list of stocks I want to buy. Twilio's off a lot. I want to pick up some Twilio. Shopify, I potentially am gonna pick up some Shopify. Square is one of the bigger names that I was gonna allocate more money to, but that looks a little bit broken. Plug is looking a little bit broken, but there are some good names like Facebook. If you weren't a nimble trader, Facebook, it's a good spot to take Facebook. If you're not a super nimble trader, it's not the worst spot to take Square. Keep in mind, just because it's down a lot does not necessarily make it cheap. It can go down more. Beyond Meat has sold off way more aggressively than Square. It's not a name I'm looking to necessarily buy. The reason I'm mentioning this is pull up the chart of BYND. It was as high as Square at one point, basically $200 a share, fairly recently, but now it's 14. So what I'm trying to say is Square can actually continue to get cheaper. So having a little bit of this recycling mentality of, okay, I think $54 a share, which is where it closed at on Friday, is a good spot. But the tape action is really negative, and I think I can maybe sell it now and buy it at 49 or something like that. No one knows where this is gonna bottom because so much liquidity. Look at the interest rate. Buying a house right now has gone up so much more. People buy stocks with their disposable income, the middle class. If they spend more money on houses and things like that, they're not gonna have the same amount of capital to put into the stock market. Just because the market sold off as much as it did, does not mean it can't sell off more. I think there are some names very close to a buy point. And the reason I mention, potentially even keeping Facebook stock, potentially even buying Disney stock, even though I think the S&P as a whole is technically broken, is because if you pull up another chart like Netflix, Netflix had once dropped down to about $170 a share. And even though the S&P's been negative, it bounced to about $220, $230 a share. And yeah, is it breaking again? Yes, but it had bounced a lot despite the market not coming up with it. Still keep an eye out on Facebook. You watch the chart of this. If you are an actual active trader, you can sell this stock and maybe buy it lower. Don't lose sleep over this bear market. Don't be so worried about this bear market. And the reason I reinstate that is some of you guys are traders, but I have a feeling the vast majority of you guys are traders and have income from other sources as well, whether it's a job, whether it's like a part-time bartending gig or something like that. If we have this bear market for another year or so, this is actually a good opportunity for you guys to cut your costs as low as possible, start basically using your income from other sources as long as that still stays intact and the recession isn't so bad to take away your primary source of income, your non-trading income, whatever it is, you can keep funneling that money into the market that you can actually dollar cost average during this year window, find good spots to put your money in. And then if you have like a $40,000 account that you're trading with, maybe when this whole storm settles, you have an actual bankroll, a real bankroll. It's really hard, at $40,000, if you're day trading with that kind of money, it's hard to grow and pay for cost of living. But if you get to 140,000, 100,000, you can maybe pay for a middle-class life while also growing your bankroll. And that should be everyone's target. A prolonged bear market is not the worst thing, especially if you still can keep your job. That's the last thing I want to say. I'm actually expecting a bear market rally at some point, but I don't think I expect it necessarily after Friday's tape. We'll see how the tape action occurs on Monday. Monday's the first trading day of October, and October is actually a pretty good month for stocks. With the market technically broken, with window dressing, there's a lot of things. We'll just have to see the way Monday plays out. Just do yourself a favor, don't trade on margin during this period. I have no intention of trading on margin at all right now. S&P down from 4,800 to like 35 and change. These can continue to fall. The Fed is signaling more rate hikes. We still have a war in Russia, crimping supply chains. Europe is basically broke. This could be the Jesse Livermore 1929 sell-off for all we know. So stay nimble, stay focused. Till next time.
I just want